Hello, everyone, and welcome back to Unitrader. Today, we're going to go over some pro tips for using the RSI indicator. Before we get into it, the obligatory disclaimer: trading and investing, very risky business, and this is not financial advice. Please protect yourself. All right, so let's hit some charts and check out this RSI. Now, unfortunately, before we get into the pro tips for using the RSI, it's important to know that the RSI on its own is not a great signal producer. It is simply a momentum indicator. And as such, you have to add some other factors to it, all right? So you can do that with EMAs or market structure or whatever it is. We will get into that a little bit later. But before we do that, we're going to have to go into some basics because we're going to incorporate basic RSI concepts with more advanced RSI concepts. And that will get us the best results and the safest results, because that's the key to this game or this business is safety, right? You have to protect your capital. It's not about making it, it's about protecting it. So if you make it and then lose it in a week, what's the point? You got to make it, you got to hold on to it, right? But at the beginning, you've just got to survive, right? So that's what we're going to do is we're going to incorporate these different modes of using the RSI with a couple of other things. Now, traditionally, the most basic way to use the RSI is that you get an oversold signal when it crosses the 70, and you get an overbought signal, when it crosses the 30, and you get an overbought signal when it crosses the 70. That is a very naive way to look at it, although, it can be helpful. But just because the RSI is over 70 does not mean you're going to look to sell it, because that is crazy. All right, so most people who use that sort of idea with it, that concept, they're going to at least change their settings to 80. So my RSI might look a little bit different. The only thing I've done really is change the styling colors, and I've turned off the RSI-based moving average, all right? So I'm not a big fan of the moving average, although it can be quite helpful. In today's topic, we're not going to need it, so we'll just keep that off, right? But if you're going to be looking for these overbought and oversold sort of ideas, then definitely go into the settings, change your upper band to 80, and your lower band to 20. And what I would suggest is that I do look at the RSI for overbought and oversold, but I do it on a much higher time frame. That I'll be looking on like the daily chart, maybe even higher, and I'll use that generally with a volatility indicator like the VIX. It's not great for crypto, so if you're looking to use the VIX for crypto, there's better things. So that is traditionally the most common sort of basic way to use it. We're not really going to be doing that today, but if it helps us, then we will use it, all right? So the problem with it too is again, when you're in a trending market, you can easily hit 85. All right, it happens quite often. Like here, you're at 81-ish, 82-ish, but it can hit 85, and it can give you a lot of fake signals. All right, so always going to use it with the trend, and we're not really going to buy this idea that this is oversold. You see how this is oversold here? You get this little consolidation here, and then it just keeps going. And this is giving you lots of fake signals here. All right. You've got your momentum going down. If you're looking to trade just off of this stuff, you can get hurt. All right. So be aware of the trend, and be aware that you can get a lot of false signals off of all indicators. All right. Because they're not good. Many indicators, especially momentum indicators, are really not that great in trending markets. So if you're really trending upwards, what you're going to do is just wait for that pullback and try to use the RSI to join the trend, right? That's the safest thing to do. Be safe, man. Be safe. The second most common use of the RSI is to identify divergences between price and momentum. So we have two main types of divergences, and then we also have a differentiating factor. So let's talk about the divergences first real quick. Basically what we're looking for is you see price is putting in lower lows, and you see that your RSI is putting in higher highs here, all right? So it's a pretty interesting thing here. We've got our trend here, and on our RSI, we've got a trend looking something like so, all right? But the final turnaround here is, here's our low. So you can see here, there's also going to be times where you're going to get these fake signals, all right? Like this is already a divergence here. So if you're looking to trade off of this on its own, it can really get you chopped up, all right? And by the time, then it gives you another signal with divs and then another signal with divs. And by the time it gets to this one, you're going to probably be like, oh, forget this. This doesn't work. And you're going to walk away with a couple of losses in a row, anger issues and that sort of stuff. And nobody needs that. So what we're going to do is forget about this for a second, but that's your basic bullish divergence, all right? Price puts in a lower low and your RSI is putting in higher lows, bullish divergences. And this is a signal that a reversal may be imminent, all right? Doesn't guarantee anything. There's no guarantees, all right? So bullish divergences. Next, we're going to take a quick peek at the NASDAQ here, my baby. And it's the exact opposite for bearish divergences. You've got a high on the RSI and you've got a lower high while price is putting in higher highs. All right, so this is an indication that a potential reversal may be coming our way. Then we have hidden divergences, and hidden divergences are much better for trend continuation trades. So if you're looking, if you're building up positions, if you're more of a position trader, it's a great way to slowly build up that position. Great for continuation trades, all right? So what we are looking for here is just the opposite idea. Let me just move this real quick up here. We've got price puts in a low and then puts in a next low and it's higher. And you can see that the RSI is doing the opposite. It's got a low and then a lower low. So this is a hidden divergence. You can see that momentum is increasing to the downside, but price is not. So it's a little bit odd, right? There's something odd happening here. And you can see that, in fact, it does break this high and this trend does continue. On to everybody's favorite degenerate coin, Bitcoin. Here we go. We've got hidden divs here where we've got a obvious bear trend. We're in a mega bear trend right now. So you put in a high, RSI puts in a higher high. And here you can see that you put in a price action high here and then another high here. Now it's important to use the bodies. When you're looking for these, don't use the wicks because your RSI on standard settings is going to use the close of the candle, not the high of the candle, all right? So we can obviously see here some blatant hidden divergences. So a really nice trend there. Okay, so then we have a differentiating factor that we are going to take a look at here. All right, and it's a concept of two types of divs, really. You have your hidden divs and your normal divs, all right? And then in those, we have what we call narrow divs, narrow divergences, and wide divergences. Okay, so let's just take a peek at this move here. You see how price is really moving down and you get this divergence here. You've got a low, a little pullback, pushes down for a new low, and you've got a bullish divergence. Now, many people don't like these because this is what we call a narrow divergence, all right? So all it is you're pretty much looking for just like a one move divergence here. All right, and then the wide divergences would be something like this, right? In this case, it's a hidden divergence, but it's wide nonetheless. So here we've got, and this is a great example here because we've got now let me get rid of this real quick, keep this as clean as possible for clarity's sake. So what do we have here? We've got a higher low on price action, and we've got a lower low on your RSI. So this is a wide divergence, correct? And this is a narrow divergence. That's the difference. Usually on the wides, you're going to get at least a push up towards the midpoint. And oftentimes you'll get full rotation to the other side of the positive side, all right, or somewhere around the 70, sometimes lower, sometimes higher. We never really know. And now the beautiful thing here with this divergence, if we've established this hidden divergence, we've got a potential play here for some sort of a continuation trade. All right, so I'm just going to match this up to the low here of the RSI. And then price keeps coming down. And now we have a wide hidden bullish divergence with a narrow bullish divergence. All right, so now our RSI is putting in a higher high, and price is still putting in these lower lows. Okay, now personally, I like all divergences, I really do, but this is where the magic really starts happening, is where you get a div with a div. So if you have just a normal divergence, a wide divergence, bullish divergence, and then a narrow bullish divergence, that's a great sign. All right, you're now starting to compound your divergences, and this adds some confluence. Okay, so I hope that that makes sense. Okay, so divergences, wide divergences, and then narrow divergences, and both are great. All right, a lot of people do not like narrow divergences, so it's up to you, right? However you like to play this out, that's fantastic. Okay, so both concepts that we've gone over so far, the highs or the oversold, overbought, and also the divergences, a lot of people don't really like to use that. A lot of more experienced traders, so what they'll do instead is look at the RSI as strictly a momentum indicator. And what they're looking for is, can it get above the midway point? And that indicates that momentum is strong and you've got a bullish move now happening, all right? And then when price gets back below it, they think that it's now bearish. But you can see you'll get all kinds of false signals off of that as well, right? So it's not like you're using this without context. We have to use context, all right? So again, we're not going to use these as standalone concepts or strategies, right? So my preferred use of the RSI is really as a signal indicator in combination with price action, but you can use it with market structure, trend lines, moving averages, etc. The sky is the limit. So what you want to do is really look at this and play around with other factors, all right? Whether that be, again, trend lines, whatever the case may be. So we'll go over a couple of different things and take a peek at what's going on here. Now, here, this NASDAQ was very interesting on Friday. Let me just close this, get these lines out of here. And so we'll talk about this. Now, one thing that is very interesting about it is that momentum is a trend as well, right? It's not just price action that trends. So there was a real interesting move off of the New York Open here. Here is our open at 230, does a quick little spin cycle, and then it starts to pump. And then we get a divergence here. All right. And the move never really finishes off here, it gives one more push up. So as we are following this up, okay, you don't really have any great signs here to be getting out of a long position or maybe into a short position. But by the time it gets up here, we will have some real good reasons. So now we've got a bullish move here with some bearish divergences, all right? So we've got a high on our RSI, we've got a lower high on our RSI, and we've got a higher high on price action. So now that we have a confirmed divergence, I don't keep my trend lines on there. What I would do in this case is I would follow the trend from underneath here and wait for price action to confirm a break of our trend to the downside. And this is just a beautiful example because we have a high inflection point here with a 2-bar break, and you're breaking this trend to the downside here, all right? Now, this is not the only trend you want to watch. You also want to watch for confirmation from the RSI itself. Again, the RSI is a trending mechanism as well. You'll see it does it all the time. So we want to put some trend lines here because if this trend doesn't break, it could still keep going up. All right, now you might say, well, this trend broke here, right? Which is true. But if you look at the price action here, you're getting, some buyers stepping in here. You start to see that maybe this isn't quite done yet. So there's no real confirmation here. This is the best bang for your buck, all right? Why? Because, again, we've got a real nasty break of this trend line. You have a bearish engulfing candle. Those are the candles I'm always looking for, is either engulfings or pin bars. And that is what I live for, all right? So I want to see a candle like this. Yeah, I don't want to see this sort of in-between stuff. Nobody's really taking over there. So that is it. You're putting a trend line on your RSI, and you're also going to put a trend line on your price action. You're going to wait for confirmation of the trend to break on price action and on your RSI, all right? So you can see here, obviously, that this candle breaks both of them. And then you also want to make sure that you've got some great confluence here, right? Not just trading the stuff on its own still, all right? But this is what we're looking for here. So what we would love to see here would maybe be some wide divergences and some narrow divergences, because here that's all we really got. Now, when it's New York open, this is a lot of times going to happen. You're not going to get wide and narrow divs right off the bat, but it'll show up later on. All right, so that's just looking at price action. Now, let's take a peek here at this New York open high. All right, first 22 minutes of trading, New York puts in a high, and then you get this big pullback here, all right? Now, again, I'm a big fan of using market structure, okay, in combination with price action. So if we move on down later in the day here at around 4 o'clock, price finally hits back into the New York high, breaks it, comes back in, puts in a low, all right, and then comes back in and puts in a little bit of a higher low, all right. Now, this is a fantastic trade opportunity here, all right? There's a couple reasons. First of all, the RSI is kind of coming down to retest that 50 mark, and it's holding. And you can also see here that we've got a low, a higher low, and here we've got a low and a lower low. So here are some divs. Okay, and we're on a high here. So we do have market structure to support us. And we obviously have some hidden divergences here, right? Which would give us the idea that we're going to continue up, all right? So can you trade this? Yeah, you can. All right. Now there's a couple of factors here that I find a little bit concerning. And for me, it is the fact that the price action is not great. All right. But it's not bad. Okay. So we have no bullish engulfing. We have no pin bars. All right. But we do have the break of both the RSI trend and our pullback trend. And again, we're hitting into this and we've got our hidden divergences here, right? So it's real important to just practice finding divergences, hidden divergences, getting used to the difference between the narrow and the wides. Hopefully you can find wide divergences, which then print narrow divergences. That's really where the magic happens in confluence with some sort of level, all right? Now, price does put in a new high, so it confirms the trend is still up. Okay, and then we get a pullback, and the exact same thing happens again, only now it sets up as a beautiful trade. All right, and I talked about this in the Discord group. And if you want a PDF file with these hidden divs and div concepts with images, easy to follow, easy reference, join our Discord group, and we've got them in there for free. And it is free, our Discord group, unless you want to join the VIP, but you don't have to. Anyhow, we can see now that as price comes and tests the same New York open high here, we again have hidden divergences. So we've put in a higher high. All right. Price then comes back down, puts in a higher low, and we get a lower low on our RSI. And then look at this magic. We get another push down. And here's our hidden, here is our narrow divs on top of wide hidden divs. So we start to get some of these real nice factors happening here, right? So we've got a low, a little pullback, a lower low, and here we've got a higher low. All right, it's a beautiful thing. Now, before that happens, the trade is a little bit on the dodgy side. Okay, but these are the kind of things where you have to ask yourself, what do you look for, all right, when you're trading? If you want to wait for this break here of the RSI structure, this would be the best pull, I would say. But some people, and I wouldn't argue with them because it's very subjective, this stuff, all right, are going to pull it like this, all right? And it's a pretty aggressive kind of look here, all right? And I love that, all right? I really do. But the safest one is to try to catch a bit of a longer trend. Now, the reason I also love this is not only because of this break and obvious trend break here, but you've now got a bullish engulfing candle with a shaved top. So that's just a little bit of add on there. When you don't have a wick at the top, there's absolutely no pressure pushing back from the sellers here. And that is a beautiful confirmation candle for me right there. And as we can see, the trend does continue on for a banger, an absolute banger of a trade. And that's really it. All right, so we are looking to build divs on top of divs, like on top of divs sort of idea. And we really want to get used to just plotting out trends here, all right? There are people, I know I have a couple friends who use this strictly as a scalping technique. You know, they'll just follow the trend, and then they'll follow the trend on the RSI. And then once it breaks, here is our break candle. They'll hop in and just go for a quick scalp, maybe up to the last little pullback, or maybe to the high, or wherever it may be. All right, but that is that in a nutshell. All right, so this is looking at it with some market structure. Again, you can use fair value gaps, order blocks, EMAs, or whatever. If you like to add another indicator that's going to give us also some market information. Personally, I really like using Bollinger Bands with RSI. All right, now the Bollinger Bands do have a moving average, but this is more of a volatility indicator, correct? So now we've got momentum, trend, and volatility. You've got all three types pretty much of indicators on your screen just with these two. Okay, so we can see our trend is up. All right, we can see volatility start to really pick up here. Volatility really picks up. So if you want to get in these aggressive moves, which are sometimes the best, we're going to look for good reasons to do so, right? So very, very simple stuff. Very simple stuff, actually. So here we go. Trend is up. You've got this big volatile push up, huge expansion on our Bollinger Bands. Get a little pullback, price pushes up, and now we're just waiting for a pullback, and that's it. So again, this is going to be that same zone here for that great trade. All right, and it's the same thing. So your Bollinger Bands, we don't have to really go over this again because there's your trend. There's your trend. You've got your divs. You've got wide divs. So hop on in there. Don't be afraid. Do not be afraid of that, all right? And we could do the same on Bitcoin. Let's just get rid of this on Bitcoin. What are we on here? The 15-minute chart. Let's get a little bit closer to the crazy price action that we've been having for the last few days. All right. So these two zones here are just support and resistance zones that I have. These are very old zones based on the 4-hour chart. Okay, so price is moving back up here. Let's throw up some Bollinger Bands real quick. Okay, and you don't have to use Bollinger Bands, but use something, right? You have to use something. It's whatever whatever speaks to you, right? Whatever you like using. So we have this push up here. We put in a high. We're approaching this support resistance zone here. It has flipped, and price pushes up, and we are putting in these monster divs, and we've got narrow divs, and then they start to widen out. Now, in a case like this, would I be looking to trade maybe just off the Bollinger Bands? Yeah. So here, this is a great little trade here. You come up, you put in your divs. Now, this is a very personal thing, right? Do you want to be very aggressive? Do you want more confirmation? What kind of trader are you? That's up to you. The more aggressive, the less safe generally, but the more reward, right? So here we've got a push up again. We put in a very, very high move into the 85 zone here. We push back up, challenging this high, and then price collapses down again. So you could be pulling off the trend here off of the bearish signal. Now you might get in here thinking that this is going to hold, but what you want to see is some sort of narrow div buildup, okay? And if we look back, we've got a high here, okay, low high. You can even go further back, and you can see that this move has so much momentum to it that this is an obvious hidden divergence here, all right? So once you do get this, you do have a a potential, all right, for a narrow div, which is what this happens, all right, what it happens to be, sorry. So you get the pullback, you get a lower high and a lower high, and then you put in a low and a higher high, and here you get a lower high. All right, so great little spot to be in here. Now this move was pretty aggressive up, right? So we might want more confirmation off of this, right? It really depends how you want to play this. So for my students, they all know I talk a lot about traps and how to trade out of traps. So you can see them coming up here, and they're just trapping some bull volume here before they break it on down. So many times I'll hit this a few times off the top. All right, so now you can use this as in a more of an idea-based signal indicator, as opposed to needing all of the compounding factors such as narrow divs, wide divs, all this. We've got big divs here, we've got narrow divs here. Price comes up, pushes back into this high. And what you can see here are just beautiful entries, all right? Off the break of this, you've got the bearish pin bar here. That's a no-brainer. Price turns around, comes back up to the highs. All right, after a 1.94% move. Price comes back up, puts in a, can't take the high here, but comes right back into this wick, and then again, a bearish pin bar, another no-brainer. So you can trade that, and you can see now that the big candle down, which again, this is a high inflection point, a hip with a 2-bar break here. If you don't know what hips are, again, join our Discord. And price pushes on down. And now we've got this range here that we can look to see if it's going to retest and then continue on down, all right? Because again, this is just a trap. They're just trapping people up, trapping volume, trapping the bulls. And let's see if they will continue down. Now, look at what happens here, right? So now you've got bullish divs here. And so are you going to look to aggressively trade this? These are things that you're going to have to decide for yourself. Personally, I would have been trading that. And this, I would be cautious on this, all right? I would really be cautious. And what I would be thinking now is that this is potentially another trap. So who are they trapping here? Okay, so I would be a little bit cautious about this. And I would probably look for it to break down out of this low range here. Break that, and then maybe come back and retest it and continue down to potentially add to this trade or get into a new position, all right? So that is kind of it in a nutshell, right? Again, here we're using just basic patterns, right? You could call this a head, neck, and shoulders, right? Weird neckline. All right, it breaks, it pretty much runs where it's supposed to. That's pretty much the head, neck, and shoulders playing itself out. You could also look at it as just breaking out of the range, right? It's a breakout trade. Be careful with those because price often does come back. And that's really it. All right, again, you can use Bollinger Bands. If you want to use EMAs, you can use any sort of EMA you wish. But the key here is to really kind of look at the momentum as also a trending sort of beast here, right? So you've got this divergences, price pulls back, takes the 50 out, but not much, and then comes back in, starts to push up here. Don't be too afraid of this stuff, but also be very aware of it, right? If you had have gotten into this position and price starts to turn back around and then breaks back above the 50, you might want to think about closing that out. And then once you see it come back up, put in the pin bar. Now we don't really have any divergences here, but again, you do have a break of your momentum trend. All right. You've got a real good signal here. Stop loss is going to have to be above that high, obviously, maybe even that high. But it all works out quite nicely in the end for a much bigger move than this first trade that maybe you would have gotten in, even if you had have waited for that confirmation breakdown out of the RSI trend. Quick 4.75. Not bad. Not bad at all. All right, so what I would also recommend is don't start trading this today or tomorrow, right? In fact, I would recommend you don't trade. But what you want to do is learn on your own how this keeps you safe, right? That's what you want to look for with these indicators or techniques or strategies that you're going to eventually start to implement, is how does this stuff keep you safe, right? So if we're looking at an indicator like the RSI that does give quite a lot of false signals, all right, what do you need to see? So again, it's a little bit naive just looking at this as oversold. And you can see as the price really pushes down, it doesn't really go anywhere, right? It just forms this little channel here, this little range. So what I would recommend is that you just watch it, all right? Do you want price to be in the oversold and overbought zone, right? That might be a factor that keeps you safe, and it will be, I guarantee it. Then you want to see wide divs and narrow divs, or will you take it just on narrow divs or wide divs? And what I would suggest is that it really depends what you're hitting into, right? Because a lot of times if you hit a strong level, you're going to get a pretty nasty reaction off it. Something like this, right? So here I know we don't have any divs, all right? There's nothing here to talk about. But you can see this is a very strong reaction, right? So a lot of times it won't give you that narrow div sort of opportunity, okay? Hope that makes sense. Let me just see if I can find a quick, decent example of this. Okay, so a move like this, all right, very quick, and again, no narrow divs here, right? So just wide divs, price pumps up, RSI breaks the 50 mark, and then you get that pullback. Now you've got a lower low here, and here you've got a higher low. So you've got some hidden divergences here. All right, what do you need to see here to stay safe? Is it price action? Are you hitting off whatever, Bollinger Band low? If we look back, we've got a established low here. Okay, so we're just hitting back into this wick where buyers already stepped in aggressively. Maybe you want to look at volume, right? Volume is one of our best indicators. So maybe a little bit of volume confirmation. Huge bearish pressure coming in, huge bearish volume, and then the bulls just push right back up. It stabilizes, creates a little bit of a zone here, and then it pushes away. So you know this is going to be a relatively big zone, right? Is that enough for you, right? That's what you want to really think about with these indicators and strategies, right? So I as much as I would love to just show you a strategy that'll make you $1 million, it's not a realistic idea. The realistic idea is for you to feel safe with this, and you're not going to feel safe by some Yahoo on the internet just telling you, or on YouTube in this case, you know, what to do. It's play with this stuff. Take what you've already started to kind of excel at, you know, whether that be Fibonacci's, order blocks, fair value gaps, EMAs, whatever it is, and try to see if you can incorporate this information into it that keeps you really safe and builds your confidence. And that's why you shouldn't really use this stuff right away, right? You want to build that confidence up so that you can go into a trade feeling good about it, right? Having a game plan. We didn't really talk about trade plans here, but you know, it's the same as always. Just use your use your noodle. All right. So, here we go. We've got some good divs here. We've got nothing there, nothing there. So all we've got is narrow divs here, but the narrow divs start building on themselves. You see this? You've got a low and a higher low. So I'm just going to mark this off here. Oop. So there's our low. And then we get a higher low. And then you get a lower low on price and a higher low. So now you're just compounding two narrow divergences. That's all we've got here. 1, 2, right? Is that enough for you to feel comfortable, right? You're not going to know this stuff until you really watch it, play with it, get a good sense of what's going on here. And then price comes back down, puts in a lower low once again, barely, but it does. So it'll really kind of get you to think about how diabolical this stuff can be, right? Like, you've just got 3 signals. The first 2 are false. Okay, if we look at our trend here too, right? That is a pretty decent entry here, right? And then price pushes up a little bit. So can you stay safe with a 0.35% or a 0.41% move? You can, right? If you're incredibly disciplined, then price pushes back, gives you another divergence, right? Yep. The next divergence here, and then once again, it breaks that trend line. Okay, so now you're breaking your RSI trend, and now you're once again breaking and now you break out. Really, that's the confirmation candle there, but that's it. Bullish engulfing. That's your entry, right? Again, here, if we look, this is a great candle as well, right? Nice bullish engulfing candle, right? Here, also a bullish engulfing candle. So it's pretty wild. You're getting a few signals in a row here, and some of them are not going to be that great. So maybe you want to wait to see if price can actually break out of this zone, get above that 50, and show you that the trend is back on to the upside, right? And then you're going to have to wait for that pullback once again, right? So now if we're using market structure, you've had those divs. Let's say you've got this range high here. You break out of the range, you come back, retest it. Here is your trend to the downside. So make sure I get it on the body there. Okay, here's your trend on your RSI. And you get a real quick break on that, and it's retesting the 50 again here, and it's holding. And then you get a bullish engulfing after hitting into this fair value gap. All right, I don't want to complicate this too much, but there's all kinds of stuff that you can use this with and that you can see, right? We want to try to keep things as simple as possible, but at the same time, there's a lot to know in trading. Take your time. Don't be in a hurry, right? But you'll see all of this stuff sort of happen here. We broke out of this range on a fair value gap, and then we created another fair value gap. So we've got a breakout fair value gap, a breakaway fair value gap. It takes out structure. So the move might be over. That might be all we're getting out of this, right? And then price pulls on back into this. And so what makes you feel safe, right? What is going to keep you safe? Beautiful thing. That's really what you want to do with this stuff, all right? So don't be in a hurry. Don't be looking for the silver bullet. There are no silver bullets in trading. Nothing is 100%, right? This is a pretty nasty business. You've got to be in it for the long haul, all right? So yeah, just take your time, practice with this stuff, really try to figure out what you want to use the RSI with, if you want to use the RSI with. For us here, we use a couple of different in-house indicators. So this is my favorite one. It is a structure stock that was created by one of our moderators, Mr. Digital. It's a beautiful indicator. So I always have both of these on at the same time. I know that the stochastic is also a momentum indicator, but with the structured stochastic, you do get a lot more information. So, just see what you can do to really combine a couple of things together to start making them work well without overloading your charts with a bunch of stuff, all right? Because that's not really going to be that helpful. All right, so on that note, please, if you like what you heard and you want to see more, let me know. Leave a comment, subscribe, like, share the video with your grandmother if you wish. And again, join our Discord. Link is in the description. We'd be more than happy to have you. Hope you have a wonderful weekend. We're getting battered by storms here right now, big time. So, yeah, let's see how this weekend goes. Yay, Leonard. No, Leonard's gone. It's Martha now. Good old Martha. Hey. Anyways, stay safe, be well, and I'll see you on the next one.